Joining us now to talk more about this, as well as her new op-ed titled "Many Americans Are Fighting the Fed, Good for Them," is Sheila Bair, former FDIC chair and member of the CNBC Financial Wellness Advisory Council. And it's great to see you, Chairman.
Nice to see you,
Chairman Bair. And I have mixed viewpoint here. You're gratified that a lot of people are sort of saving for a rainy day and prepared for a downturn, whereas the Fed doesn't seem to be in that same camp. I'm sort of sad that people are still very, very affected by what happened 10 years ago, and I hope that doesn't keep them out of they're so risk averse that they don't participate in what's happening in the stock market right now. You're happy that they're not as freewheeling as the Fed about their finances.
Well, yeah, I mean, I think it was more focused on consumer spending and the management of their own personal finances. I think, people should be in the stock market long term. I don't think people should try to time the market, especially retail investors. But I was more focused on the trend, which is to, cut back a bit on debt, cut back a bit on spending, save a little more. I think, that's prudent. I think the likelihood of a recession is not insignificant, and certainly a slowdown next year. And so I'm glad that they're doing that. Of course, monetary policy, low interest rates are designed to get to people to borrow more, to spend more. And they're not doing that. They're fighting that. And I think that's a good thing, yes. Yeah,
that's the Fed. And then you've got the federal government itself not exactly.
Well, that's true.
Not exactly being spendthrift and prudent.
It would be nice to see some of that prudence on the part of the federal government, too. That's for sure. A lot of debt out there.
What do you think we would need in terms of dry powder for the inevitable next slowdown? Is that going to be a problem in your view?
Well, I think it is. It's hard for me to see how this ends well. If we get into a downturn, if we get into a recession, we're going to need fiscal stimulus, and I don't see how that happens other than monetizing the debt. I think the Fed is already buying $60 billion in T-bills a month now, which has helped, uninvert the yield curve, and maybe that's positive. Maybe it's confusing market signals, but it's hard to see this massive amount of debt that the market's already having trouble absorbing is going to increase if we need fiscal stimulus, which we will. And so I think the Fed's going to have to monetize it. And I think, again, longer term, that's not a good trend at all. And I don't know. See what else they're going to have to do. Quantitative easing again. They can't lower interest rates that much more.
What do you make of the geographic center of the Democratic Party right now? And it's whether you want to talk about Elizabeth Warren or Bernie Sanders, is that a winning argument that you're seeing, or how did we get here in terms of all the support with young people?
Well, it is certainly a much more expanded government role. I think some of their themes resonate with me. I do think we have a rigged system in the sense that a lot of our tax policies are skewed towards very wealthy, people who get most of their income through investment, not through work.
Capital gains.
And so I think, attacking some of those root causes would be a good thing. I do think the system's rigged. I think bailouts of the type we did in 2008 and 2009 rigged the system. It kind of propped up the banking sector. It propped up financial assets by using monetary policy to drive economic recovery. Didn't do much for homeowners, and an economic recovery driven by monetary policy has not been robust. We're just finally seeing a bit more wage growth. So, I think relying on monetary policy, the tax code skewed towards investment income, I think those kinds of things do favor the wealthy, and we need to grapple with them. But I'd like to focus more on those root causes as opposed to, kind of going after billionaires. I don't think that should be personal to anybody. I think they need to acknowledge that part of the reason they were able to accumulate wealth is because they do get very, very favorable tax treatment and treatment in terms of monetary policy driving the economy and the impact that has on the financial assets that they own.
When assets get marked up in low interest rate environments, people that own the assets are the ones that benefit.
They're the ones, and they are them.
There's some positive things happening with middle income people where the employment rate is as well, though, too. So we don't want to be too negative. Anyway. I mean, your name is Chair Bair. I mean, it sounds funny when I say it, but is it okay? It's still okay.
Yeah, it's fine. Or Sheila's fine too. Okay. We've struggled with that for years, Joe. But no, that's good.
I know, and I'm just going to go ahead and say it. People think what are you talking? But you are Chair Bair. Thank you, Chair Bair. Thank you.
Nice being here. Thank you.